Hey traders, it's Greg from Trade90X, and again, always love doing our. This is our Saturday. It's the 17th of February, and again, hope everyone had a profitable week. And again, welcome to another Trade90X Get Trade Fit in 90 Days weekend market breakdown review. Again, keep it simple. Every pre-market, weekend review, monthly review, post-market lesson, it doesn't matter. Keep it simple. Listen, our goal every day is to extract consistent income from the markets. Our goal here at Trade90X is to give you and help you support and build that skill to extract consistent from the markets. That's all I care about here at Trade90X. This is what we were here created, is to make sure that people understand the rules of engagement of the market so they can extract consistent income. Now, I can only speak for myself. I have a pre-market routine. I usually get up early. I take a cold shower, exercise, meditation, drink a lot of water. It's basically getting my mind ready for the day. My mindset's got to be right. Listen, if your mindset's not right, pass, take the day off. It's not going to end well. Okay. And what I mean is your game, like I said, you need to have that focus if you're going to be active trading. All right. Now, again, we have routines. Again, if you're watching me, welcome back. If you're new, welcome. Again, it's always about routines. We trade here on the East Coast. So our pre-market, like I said, I have a pre-market usually somewhere between 5 and 7, depending what time I get up. But our pre-market starts, we usually do it between 7 and 8 o'clock, which is where we build our routine. Live market is where we execute our plan from 8 to 12. And then post-market is when we're done and we rinse and repeat every day, journal and review our trades with detail. And then, of course, here on the weekly, we review the week and then get ready for next week. And then in the monthly, of course, we do our monthly breakdown. Now, in order to exceed at anything, okay, for me, I can always speak for us at Trade90X. You've got to have a plan that's simple. If you're not having success, it's because your process is way too complex. It's got to be simple, replicable, repeatable, and it must give you that consistent edge. Here at Trade90X, we created a method called the Earn the Right to Trade Live process that includes education, backtesting, support, and accountability. It's about simplicity, okay? If you're not getting the results you're looking for, then hit us up at hello@trade90x.com. You see this one pager right here? I do this every day. If you've been watching me for the last year and a half, almost 2 years, this is my trade plan here every single day. Doesn't matter. If your trade plan is more complex than that, then it's not simple enough. All right. Now, all I can tell you is that every day we come in, we focus on filtering the noise and extracting consistent income. And these are the things that I focus on. Again, I don't want to be bogged down by nonsense. Stop wasting time on shiny indicators or complex systems. Keep it simple. Now, how do we do that? I know a lot of people say it, but I actually show it every day. This is, again, part of our Earn the Right to Trade Live process. Know your numbers. I don't care what business you're in. If you do not know your numbers, you are going to fail. I've been somebody that's been, building businesses for 25 years, so I understand process strategy. I understand risk, and trading especially, you have to know your numbers. If you want to scale your business, you got to know your numbers. It's critical. Otherwise, I promise you're going to blow out your account. Now, I can only speak for us at Trade90X. When we're talking about active trading, we don't risk more than 0.5% to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital in any one session. Our focus on risk reward is a minimum of space of at least 2 to 1 or higher. And then we have defined profit and loss targets within that 3 to 5% of capital a day. And once we do, we shut down the computer. Now, why do I harp on this every day? Because too many people I see YouTube and things like that risking 5, 10, 15, 20% per trade. That's great. But if you've traded any real money before, I promise you that drawdowns and losses are inevitable. So anybody, I don't care how good of a trade you are, you could lose 5 trades in a row. So if you do the math on the 5, 10, 15, 20%, just do the math. You've gone from potentially losing 25, 50, 75, or blown out your account. And if you blow out your account, very difficult to come back. So this is why I'm such a stickler for process and numbers. And again, this should really be at the top of your list. You need to understand also what type of trading suits your personality, time, and resources. Very important. When you're part of the Earn the Right to Trade Live process, we break it down. Again, looking at some quick data, which I'm going to show you in a minute, which I do every day. These are just data points that help me give me an edge to see what is going on in the market, because all I care about, and I talk about the same thing every day, this is the most important thing. I don't care what type of trader you are. I don't care if you trade penny stocks, futures, forex stocks. I don't care if you trade a 1 minute, 5 minute, 15 minute, weekly, monthly. It does not matter to me. The things that you need to understand to be successful is what is the market context? What is the larger time frame, shorter time frame? Is it bullish, bearish, and a range? Who has control? The bulls, bears, or range? Is it obvious? Bullish, bearish, or range? Do you know what a bullish, bearish, or range context looks like? Do you know what an A setup looks like within a bullish, bearish, or range? And then finally here, do you know when to sit on hands and choppy, no edge price action order flow? Yes or no? This is all I do every single day. Here are the symbols that I do every day. These are the symbols. During the week, I show the indices. Today on the weekend, I'll go through these symbols. Now, also very important, tools that we use, monitor setups, I would not recommend using more than 2 to 3 screens. I know when I first started, I thought I had 4 to 6 screens. The more things that you look at, the more likely you're going to fail. Remember, it's about focus, okay? Keep it simple, all right? Now, before we start, I always mention the same thing. Please discuss with your financial advisor or accountant about risking capital, and make sure you have 6 to 12 months of emergency funds before you risk capital trading. And again, if you don't understand so far what we're talking about, hit us up at hello@trade90x.com. Hopefully by the end of this video, you'll understand. Again, also, when you sign up at our hello@trade90x.com, you'll also get our free journals and checklists and get on the waiting list for other important information that we're going to be putting out. And then if you go to our Trade90X page profile, you can actually book a 15-minute free call and ask us anything about trading. And then don't forget, you can also check out our our daily weekend reviews via email, Twitter, Facebook, TikTok. So check it out. All right. With that said, let's go see what the data is telling us. Let's see what our plan is, high probability plan going into this week. Now, remember, it is a holiday weekend, so Monday is a holiday. All right, let's go get it. So first thing I'm always going to do is I want to check the news for the week. Remember, Monday's a holiday. Again, I'm looking at only the most important news. Now, here at Trade90X, remember, news and earnings for me, are the things, unless somebody, like Elon Musk or it was Trump that, puts out a tweet. But for the most part, news and earnings are the things that could be personality changes. So I don't trade into news and earnings. Let the important news and earnings come out. And my hope is that it moves price quickly to our A setups within a bullish, bearish, and range market. That's all I care about. So Wednesday, you have FOMC meetings. That'll be important, of course. You've got unemployment flash. So again, Wednesday and Thursday are definitely going to be very important. Friday, but really key on Wednesday and Thursday, know these times. Okay, next, earnings. Here's the earnings. Again, everything I show you, by the way, this is all free. And again, it's about the right information, where to find it. And I show you in every breakdown we do, whether it's the pre-market, weekend, I show you this information. It's all free. So what I'm looking at here is I always want to know, again, whether you trade stocks or not, understand that the most important stocks can have a personality change, like Walmart, Home Depot, things like NVIDIA. I mean, these are important. So just pay attention regardless if you don't trade these stocks. Now, if you own them, you need to know when they come out. But right here, this earnings whisper, stock twits right here, it's all free. So just every, part of your routine, you're checking it out, in advance when the most important stocks are coming out. All right, next, fear and greed index. Again, this is a sentiment tool, as I've been talking about for the last year and a half. Again, bulls have the edge, but when we start getting to these extreme areas, this is where I start looking for pullbacks. Doesn't mean it's going to happen. It just means it sets off an alert to me that, hey, possible, potential for pullback. All right, but bulls still have control. Barchart.com, I go to stocks, market momentum, and what I'm looking for here is, again, every day, what is the overall market telling us based on the 50-day moving average? And you can see the momentum over the last month, we're still over 50%, but it's been getting a little bit weaker right here. You can see. All right, next, FinViz. One of my favorite tools, because if you're somebody that likes to scan for stocks every day or every weekend, great screener. But my interest, you typically is with their sector information. I really like their sector information. Now I'll look at 3-month, monthly, weekly. One day doesn't make a trend. And really what I'm looking for here is, remember, I talk about this every day. I mostly look at the indices, especially the S&P, which represents 75% of the market. But what I'm looking here is, do I have that confluence? Is it all green? Is it all red? Or is it red, green, red, green? Well, we definitely have more green. So it's definitely telling us bulls definitely have an edge, but we're also starting to see some red creep in. So let's just pay attention to that. But definitely bulls still have the edge. Tradingster.com, as I talk about every day, this is a very important piece of information. It only comes out on Friday, once a week at 3:30. So on the weekends, we check it out. Again, as I mentioned, you want to look at all these key symbols right here and check out what their commitment to trader. Now, what is the commitment to trader report? Talk about it every day. I call it the smart money report. And the first thing I'm going to do is go to the S&P. It's basically the 85% that control the price action, mostly the order flow. So I want to know what's going on. So what I'm looking at is asset managers, banks, institutions, not retail traders. I don't care what people tell you on CNBC. I don't care what people tell you on YouTube. Learn the facts. I work off facts, okay? I work off, are we bullish, bearish, or range, or no edge price action, and what is going on the order flow? And it's telling you that 81% of the people that control the market are still bullish, versus 18%. So I don't care what people tell you on YouTube or CNBC. Learn to do this for yourself. And this is telling you that the long-term bias still is bullish until proven otherwise. That doesn't mean we can't have several day pullbacks. It just is telling you that until you see a personality change here, again, it's definitely still favoring the bulls. Okay. Next. Again, everything I show you in the morning it's all about the same thing. Number one, is my strategy proving consistent? Do I know my numbers? Do I understand what a bullish, bearish, or range market looks like? Do I know my A setups within a bullish, bearish, or range? And do I know when to sit on hands when we have no edge pricey action? That's it. That's all I care about. And what I love about stock charts, it looks at the symbols. I can look at this predefined group and look at the symbols that not only do we like to trade, but make up the market, the context of the market. So we have the Dow, S&P, NASDAQ, FTSE 5000, and NYA, New York Stock Exchange, the Russell. I've got gold, oil, Apple, and then what I like to call is my long-term odds enhancers, the VIX, the sentiment volatility tool, 10-year bond, and the dollar. So bottom line is, as I tell you every day, and I say the same thing every day, I know I'm a broken record. Why? Because this is what works. I want to understand the long-term versus short-term. I don't care what type of trader you are. Too many traders that trade short-term don't understand the bigger picture. So all I'm looking for here is in the key symbols, are we bullish, bearish, or a range, or I can't figure it out. Bullishness is lower left to upper right. Bearishness is upper left to lower right. Ranges are equal highs, equal lows. Okay. Now, when we're in bullish momentum or bearish momentum, we are looking whether I'm trading a 1 minute, 5 minute, 15 minute, monthly, it doesn't matter. The only thing that's different is how long we're going to hold the trade, but the setups are the same. I am looking for those bullish or bearish momentum legs that are obvious that move into pullback or pause. Those pullback and pauses in bullish and bearish momentum is where we find our setups. Okay. Now in a range, we have equal highs, equal lows. We're going to break it up into thirds. I don't care if it's a 1 minute, 5 minute, monthly, it doesn't matter. I don't care what asset class. A range is a range. We break the range into thirds. Okay, the middle of the range is going to be the most unpredictable. Where I want to trade in a range with highest probability is I want to fade the edges. But at the bottom third, I have to have obvious bullish price action. At the top of it, I have to have obvious bearish price action. All right, and we play the range until it can break back to bullish or bearish momentum. Now, once you understand that, you come in here and I look at the Dow, S&P, Nasdaq, FTSE. I look at the NYA, Russell, and you can see they're all moving lower left to upper right. Again, this is the longer term. Okay, so now that we've identified that, let's go look at the shorter term. So what did I say? I am looking for, all I care about, do I have obvious bullish, bearish, or range price action order flow? Or if I can't figure it out, I have to sit on hands. Remember, bullishness is lower left to upper right. Momentum into pullback or pause. Bearish is upper left to lower right. Momentum into pullback and pause. And ranges equal highs, equal lows. So let's go through it. Dow, lower left to upper right. Right now, we're kind of in an indecision mode right here. We're up against the highs and we're starting to get rejection, but we're still moving lower left to upper right. Upper left to lower right. Upper left to up, right here, get the picture. Now, what I look at also is what is the VIX dollar? Now, the dollar and the 10-year are moving up. Now, the VIX has been kind of sideways, but I've mentioned what my only concern is it's near the lower end of the curve, so it probably has a higher probability of going up. So if the VIX is moving up, that's bearish for markets. If it's moving down, that's bullish for markets. So right now, what I'm seeing is long-term is bullish, short-term is bullish, but with some indecision in the short term. All right, we need to see a little bit more. So now that we've identified this and we've looked under the hood, now I can go to the chart. So again, this is the same process every day. So if I'm going to use the top-down approach, and then I'm going to show you our one chart approach. So number one, monthly. So the 12-month chart and the monthly, this is going to be our main trend. I don't care. This happens to be the S&P because it represents 75% of the market, but I don't care if this was Apple, penny stock. It doesn't matter to me. A chart is a chart. Now, I'm going to match that up with our commitment or trader report. Again, I work off facts, not fiction. So basically, right here, we know that it's bullish, but does the chart match it up? Yeah, it does. Yes, it does. Remember, I don't care what time frame you on. Are we bullish, bearish, or range, or do we have indecision? The only difference is how long you hold the trade. But the main trend is going to come from a monthly and above. So look, lower left to upper right. We are moving lower left to upper right. And what the other thing that I also do is these red lines are what I call decision points. And I usually get them from our monthly and weekly. Decision points, all they are is where price is paused most recently, looking left and right, and where price is taken off. And then I create these lines and they're just decision points. That's all they are. And then I want to see how price reacts. So right now we're bullish, but we're up against the highs. So we're kind of in a little bit of an indecision mode until we see a little bit more. Now, anything from a 10-minute to a weekly is going to be our intermediary trend. But when our main trend is up, higher probability to look for pullbacks to go long. If our main trend is bearish, higher probability to look for pullbacks to short. So we know we're more bullish. Now let's go through the weekly chart. I'll go through each one of these charts. Again, are we bullish, bearish, in a range? Lower left to upper right, momentum into pullback and pause. I like to use line charts before I put on my candles. Okay, that's just me. The line chart takes out the noise, and these right here were the last two trades. If you were trading the S&P on a weekly, now we're up against the high. I need to see a little bit more detail if I was trading this chart, but we're still bullish until proven otherwise. The daily chart, same thing. And you notice I have the big decision points from my monthly, weekly on. Again, what is price telling us? Well, we look left. We know we're up against the highs, but what has it been doing since September of last year? Lower left to upper right, momentum into pullback and pause. The only trades you should have been trading if you were trading the daily chart on the S&P is long, and these are the areas where I look for my trades. Momentum into pullback and pause. As soon as I see that pause, then I put on my candles. And in a bullish momentum, I'm looking for green engulfing candles, green pin bars with the wicks on bottom, or I look for those double dojis And then bearish, I'm looking for shooting stars, wick on top, red engulfing, and then red double dojis. But again, if it's not obvious to me, now this one, again, I don't trade into these decision points. So this one I would not have traded because you're right up against there. So right now on the daily chart, I need to see more something. We need to either break above or fail. All right. And this is how I go through my progression. And that's why I said less is more. I don't trade a ton of symbols, so I can quickly do this review, at the end of the day or on the weekends. Now, the other chart that we'll use for our swing trading is I will go down to a 30 or 1 hour chart, and the 30 and 1 minute, the 30 and the 1 hour chart is also going to be our anchor chart that we use for our day trading and scalp trading. Okay. Now, here are some of the tools that we use, but it's the same thing. Are we bullish, bearish, in a range? But here are the tools that I have on the 30, 60 minute that I use for not only my faster swing trading, but we use for our day and scalp. Here is where the week started right here. I have the yearly in black here, the sticker black line. This is the yearly high-low. The monthly is the orange high-low. This is the weekly in purpley high-low. And then I have the previous day's range so I can get the shorter term view. Previous day's high, midpoint, open, previous day's close, and open. These are our odds enhancers that we use. These levels are all predictive, not lagging. These levels are here before we come in. And by using these tools, not only can they be used as entry, stop, and targets, but they quickly tell us, because all I care about, are we bullish, bearish, or in a range? These levels are incredibly important. So when we look at the chart right here, let's go through it. So we had this, double bottom right here, momentum into pullback and pause. These are the most obvious setups right here. Just looking at it. Then we hit key levels. Remember, when you hit key levels, like especially the yearly and monthly, and then look at that, we had momentum into pullback and pause, and then we had that big drop, and then we had momentum. There we go, into pullback and pause, momentum into pullback and pause, and then yesterday we actually failed. So that's why I love using these levels. So let me explain. So previous day's high, low help us tell us what's going on that day, but it also tells us above, I want to be bullish. So let me show you. So if we get above, now one thing about the previous day's range, when we have other key levels that are very close to the previous day's high, low, I actually turn them into zones. So here you have the previous day's high, and then you have a monthly, weekly right here. We know that's important. But how I use the previous day's range for my faster swing trades or my day and scalp, I won't even consider a swing trade if we're not actually bullish or bearish above or below the previous day's range. So if we're doing this, then I am looking for a bullish trade that could be lasting more than a day, and I'm looking at higher highs, higher lows, or I'm looking at the momentum and pullbacks on where to enter. Same thing with below. If we get below the previous day's range and we have obvious lower highs, lower low, momentum into pullback and pause, then I'm looking for, do I have space? And we have space down at these targets, yes. But if we're inside a range, let me go to the 30 minute. If we're inside the range, then I know it's a range day. Okay. Again, understanding bullish, bearish, or range puts you ahead of 99% of the traders. Bullish, again, I look at the space. As long as we're making clear higher highs, higher lows, or below the previous day's range, lower high, lower low, those are trades that I look for bullish or bearish trades. But if we're inside the range, and you've been watching me, I break up ranges into thirds: bottom, middle, top. The middle typically is going to be the most unpredictable. Now, when I look at the previous day's range, I also want to know, is it a wide range or narrow range? Wider ranges have a higher probability of staying within the range. when you have a narrower range, it has a higher probability of breaking out or below. So when we look at the overall week, we had both bearishness and bullish, again, just read the price action order flow. Okay. All I'm looking for is momentum into pullback and pause, and where are those key levels that can help me. So on this chart right here yesterday, we had what's called a fake out breakout. The buyers tried to get above the previous day's range. So let me show you the trades that I look for in a range. So in a range, if we do something like this, it's a fake out breakout. If we do it below, fake out breakout. Or I'm looking for rejections, top right here, double tops to fade, or bottom third right here. So yesterday, if I was trading this chart, remember, we trade the chart that we're trading. If I was trading this chart yesterday, now remember, we trade between 8, and we don't trade into news. We trade usually between 8 and 12. And I do have people that do trade the afternoon, of course. But let's just put it, here was the whole day right here. This was the whole day. So if we were trading between the hours we did, this would have been a beautiful setup. And then if you were an afternoon trader, that's as good as it gets. You got the multiple rejection at a key level and zone. So beautiful. Those were the only, for me, the only trades. And then this one, of course, you'll see it when we get to the smaller time frame. And the reason why these are the only trades is because when I range, I'm only interested in fading the edges. Okay. The only trades I want to take when I see this is either we either have this bullish price action, momentum into pullback and pause, bearish price action, lower high, lower low. Again, momentum into pullback or pause. If I'm in a range, top third, bottom third, fake out breakouts. Now let's go to I use a 1 to 3 minute for my day and scalp trades. Now, again, we had news right here yesterday. So right there. So again, I don't trade into news. So this was not a trade that I took. The trade that I took yesterday was this one. And why did I take this trade yesterday? Because number one, looking left right here. And again, one other thing that I also want to recommend, always have your 30 or 60-minute chart up. Okay, so when you have your 30 and 60-minute chart, the reason I took this trade is because I looked at it right here. We had this bullish momentum and then that pullback. But once we got that second rejection, then I knew that this was a change of personality. But that first one really gave me a beautiful setup at the rejection of the previous day's range. The setup looked like this. Again, we use structured stop losses. So that means I have to look left, be below any candles, and I need to be below a key level. Same thing above. I need to look left, be above the most recent candles and a key level. And then we're focusing on our first target, minimum of 2 to 1. And we got that round trip yesterday. A beautiful trade. Remember, all you need is one good trade per day and you're good. I'm only interested in A setups. If I'm not going to get the A setups, then I'm going to sit on hands. But these were the two really nice trades. And the only reason, like I said, I didn't trade this because I don't trade into news. That's just me. I just find it too unpredictable. And again, if you stay patient, you got your rejections yesterday on the ES. So now let's go back and let's recap what we've done so far. So number one, we looked at the news, we looked at the earnings. I'm looking at the fear and greed index. I'm looking how many stocks are above and below their 50. I'm looking at the sector information. I'm looking at the commitment of trader, the long-term, weekly report. And then I look at, again, the symbols for me that are most important, long-term versus short-term. And again, everything we do our process has been proven consistent. I know my numbers, and then all I care about is the symbols that make up the market are the ones I trade. Are we bullish, bearish in a range? And do I know what an A setup is on a bullish bearish range, the chart I'm going to be trading? And do I know what to sit on hands when I have no edge? That's all I care about. And then I journal and review my trades when I'm done. So now that we understood that, again, I look at the main trend, the monthly and 12-month. We are bullish. I showed you how I put in those decision points, why. So then I go to the weekly. Again, all I care about, are we bullish, bearish, a range, or right now we have to wait for more because we're up against something like a decision point. And then again, I showed you here on the daily, this is what I'm looking for. Once I look at the lines, then I go to the candles, and now I need to see, do we get the break and retest, or do we get a failure? Not enough information yet. So we wait patiently, and then I go through my progression, and then I look at the 30 or 60 minute to see whether or not I can get a little bit faster swing trade. And as I mentioned, this chart is also going to be our anchor chart for our day and scalp. And then I explained. So you guys came to me and said, hey, listen, I love what you do, but can you simplify it even more? I want one chart. Give me a set of tools, give me the exact setups, and give me the steps so that I can go back test it. So I gave you the tools already. It's the yearly high low, the monthly, weekly, previous days high low, midpoint, open, and previous days close. These levels are all predictive, not lagging. They act as entry, stop, and targets, and they quickly tell us if we're bullish or bearish in the short term. As I mentioned, above the previous day's range, making clear higher highs, momentum into pullback is bullish. Below the previous day's range low, making lower highs, lower low, the momentum into pullbacks. Those are the trades we look for if we break above and below. And then I use those weekly, monthly, yearly as potential targets if we break above and below. If we're inside a range, the range is already there for us, bottom, middle, top. And what I'm looking for is parabolic moves. You see this beautiful, obvious price action? And then I'm looking either for rejections at the previous day's high low, or do we break out above or below into a continuation? Now, let me just identify like this. This is no edge price action. This is just no edge choppy price action. This is no edge choppy price action. I don't know what's going on. So until you get more information, we box these areas up and we sit on hands until we get an obvious, number one, bullish momentum trade, bearish momentum to trade, or rejection trades at the high low. So now that you know the setups, bullish, bearish, or in a range, you know the tools. Now let me show you the steps. So the steps in the Trade90X one chart view, any symbol, any asset class. Number one, let me take these off, clean it up. Let's go to the weekly or monthly. What I'm trying to do in here in step number one, are we bullish, bearish, and range in the bigger picture? We're moving lower left to upper right still, so we are bullish. Then what I'm looking for, where are prices most recently? Because we have a pause here and here, and we've left the station quickly. So these are the two areas of interest. I call these monthly, weekly decision points. That's all they are. I don't trade into them, and then I want to see how price reacts. Step number two, I go to the 30 or 60 minute. I've been using the 30 minute of late to see a little bit more structure. I squeeze the chart up, and I can see that over the last few months, weeks, we've been moving lower left to upper right. That's bullish. Then I zoom in over the last week or two, and you can see that we're sideways. And it's no surprise, we've got a monthly and weekly up here. I've got a weekly down here, and I'll just put in lines here. They're just important areas. So again, when I come in step number three, right here, what is price telling us based on, if you're going to trade the 30-minute chart, okay, we know that we've got this incredibly important zone right here. But again, where is price? Is it above the previous day's range, below, or inside? Well, the overnight traders, when it came in, it looked like they had a shot, but we had what's called a fake out breakout. So again, the areas, just looking at it, would be here, here, and as I mentioned here, those are areas of interest based on the price action order flow. So going down to our one, remember, we're going to trade between 8 and 12, but there was important news yesterday at 8:30. So I'm not going to trade until 8:30 there, as I mentioned. So step number 3, again, we sit patiently and wait for our trades. The trades that I'm looking for are, I want to see movement. Like right here, this is where you basically, this is just chop. I don't trade chop, and either should you. You basically box it and sit on hands. And what I'm looking for are movements, parabolic moves up or down. If we're in a range, remember the trades in a range are going to be top third, bottom third, or fake out breakouts. Again, beautiful setup. Beautiful setup right there. And then we're looking for 2 to 1, or if you're in a range, I'm looking at middle and top. If I'm at the top, I'm looking at the middle and bottom until price can, move out. So again, you have either bullish momentum trades above the previous day's high, bearish momentum below, or you have range setups, top third, bottom third, fake out breakouts. That's it. And I wait for these. I wait for the parabolic moves up or down and rejections. I do not want chop. Stay away from chop. And again, this is why we have the Earn the Right to Trade Live process with extensive backtesting and replay, because that's the only way that you're ever going to learn what a bullish, bearish, and range market looks like. What are the A setups in a bullish, bearish, and range market? And then using our tools, our setups, and our steps, this will allow you to trade whether you want to do faster swing trades or day or scalp. All right. So coming in, the S&P closed Friday in an inside day. So the new high low coming into the week will be right here. All right. So that's the S&P. Let's go look at the other symbols again. And I'm going to run through a bunch of these symbols right here. So let me take it off, start from scratch. Step number 1, go to the weekly. Again, if there's anything you're not getting, hit us up at hello@trade90x.com. This is $1 million stuff. Again, I give you the goods every day. I show you the data points that we use. I give you the trade plan. I basically, again, I'm giving you the steps. Number 1, right here. Number 2, 3-step process. Number 1, what is the main trend telling us? It's moving lower left to upright. Where are the areas where price has paused most recently? These are the areas of interest to me in step number 1. Step number 2, I go to the 30-minute chart. What I do in the 30-minute chart, our intermediary, I'm looking to see what price is doing over the last few weeks. It's moving lower left to upper right. It's been bullish, and then zooming in over the last 2 weeks, you can see over the S&P, it's kind of been sideways. And then again, where is price within the previous day's range? And then I'm going to look, if we break out above or below, where are those weekly, monthly, yearly levels? So I have these levels kind of marked. So if I was going to trade the 30-minute chart yesterday, we can see right here that just looking at it, for me, these were areas of interest to trade. Now this one happened during the news. Again, unfortunately, I don't trade into news. If that's something that you want to do, you have to prove it in your back testing that you can do that with consistency. Otherwise, do not do it. Let's go down to the scalp chart, day and scalp chart. So here it is. Here was the news. Now, NASDAQ actually gave you a nicer setup right here. If you waited till after the news, we actually got another rejection. So you had momentum into rejection. So this would have been a very nice trade as well. You're in the top third. And why I like it is because you've got the open and the previous day's range high as a zone here. So absolutely, I like that setup. And then this one, I really like this one. That was the one that I took. Basically, we put in a W pattern. kind of reversal pattern, but I don't take it here on the breakout. I waited for the break and retest, and then I take the trade. And then I'm looking back to the middle and top right there. And that was a nice trade right there. And then again, if you were somebody that traded the afternoon, definitely here. But these were the areas for me. These are what I call the A setups. And again, when you put in the chart time, the repetition and replay, this is going to become second nature. So again, this is going to be the new, this will be the new high and low right here coming into the week. All right, let's go do YM. I'm going to do a bunch of symbols until this becomes second nature. And again, I do this every day, and I've been doing it for over a year. So let me just put these here. All right, so again, monthly and weekly, step number one, what's price doing? And we're moving lower left to right. Where has price been pausing? Well, we've gone into momentum into pause, momentum into pause and pullback. So these are levels. That's why I have those here. Now let's go to our 30-minute and step number two. Again, it's the same thing with any symbol, any asset class. Again, 30-minute, what's it been doing? And you can see it's been moving lower left, upper right, but a lot of sideways action over the last few weeks. I'm going to mark off the most important levels, those weekly, monthly, yearly up here. And then where is price in relationship to the previous day's high? Are we above it, below it? No. So what we had here is, you can see it, is we had a fake out breakout. And we had a rejection. But again, this one was in the middle, so I don't like trading the middle. So if you were trading the YM yesterday, if you were an afternoon trader, that was the trade. This is based on 30-minute, okay? Now let's go to step number three. Let's go look at our day and scalp chart. Let me put in 8:30. All right, right there. All right, so when we look at this chart right here, again, if you're going to trade the middle, here are my rules. Number one, you have to have back tested it in your strategy over a body work that show consistency. Two, the range has got to be wide enough where the middle to the top or bottom is 2 to 1. So here was your double bottom right here. We have to be below the most recent candles in a key level. So this trade only gave you about 1.5. So here's the thing. If you have proven that that can give you consistency, I'm okay with it. I'm all about proving it out over numbers, okay? That's all I care about. So bottom line is that did not give you, that did not give you, and again, the middle alone is not, again, this is why I have 6 or 8 symbols. I'm going to focus on the symbol that gives me my A setup, okay? Even though this was a nice rejection, it didn't give me the 2 to 1. There were better, definitely, trades. Now, if you were an afternoon trader, the YM definitely gave you a nice fake out breakout. So for me, these were the 2 trades right here that I really liked. Again, just based on the rejection candles right there. All right. Again, I don't trade into news, so that wouldn't have been a trade that I had. All right, let's go to the Russell. Same thing. Let's take all this off. Let's go to step number one, rinse and repeat. Trade90X, one chart view strategy. You guys asked for it, we built it. All right, so the Russell, I hope, and I've been doing this every day, I hope you can see in the larger time frame here, we are basically in a range right here. We are basically in a range, higher highs, equal lows. And you can see if you're somebody that is a longer term trader, you had multiple top third, bottom third rejections. And right here, most recently, you had the fake out breakout. So right now on the Russell, until price, and I'll put in these boxes, we know that until you break out of this bigger range, that we could continue in here. So that's it. It's about reading what the chart's telling you. Are we bullish, bearish range, or no edge? Right now, there's no edge. We're kind of going into the top third based on this chart. Now, let's go to step number 2 on the 30-minute. Now, what's really nice about this is why I said you need to understand the longer term versus short term. You know that there's a bigger range in play. You know that this area is important. And until we really get above it, and again, what I'm going to do is right here. Yep. So we know that part. Now, coming in, you can see we've been kind of sideways. So I'm going to put in my other key levels here at the weekly, monthly, and this last year. So those are important levels down there. So coming in today, now, if you were trading the 30-minute chart, I'll take that off. So right there. So your previous day's high, midpoint here. Now, again, remember what I said, whenever you have multiple levels very close together near the previous day's high and low, please box it like that, like a zone. Excuse me, my voice this morning. I don't know why, but it's been happening a lot lately, but it's all good. Anyway, so again, it's rinse and repeat. Step number 2, we can see when we look at the price action right here, look at what's happened for the week. We had our bearish, and then again, just read the price action, bullish momentum, and then look right here, multiple rejections at a key level. I'm not surprised. It's a monthly and weekly. It happens all the time. So you have a previous day's high, monthly and weekly open. This right here was a beautiful setup. So again, this actually happened before we got it, because we usually come in right around there 7 to do our pre-market. But that was a beautiful setup for the overnight traders. Okay. And that was the only trade really that I see I saw on the Russell on for Friday. That's the unfortunate part of trading. Sometimes we had news here at 8:30, so right there. Again, we don't trade into news, but sometimes, unfortunately, there are great trades that happen, and it happens outside the trade time we trade. Now, again, I don't trade into news, and then this is just chop. This is what I was talking about. See this? That's just chop. Just stay away from that. It's not clear. Again, I want this. Okay? I don't want this. I don't want this. This also, and we had the rejection, but overnight traders had a trade here. But for me, the Russell was something to stay away from. Okay. And again, once you get good at this is why we have our Earn the Right to Trade Live process, our repetition replay. You'll know to stay away from this. All right, let's start doing some other symbols here, other asset classes. We're here on the weekend, so I go a little bit longer. Again, I hope you guys are really getting value out of this. I hope you're enjoying this. Again, this is a process that works beautifully. Step number 1, weekly. Again, what's going on? Well, you had bullishness, bearishness, and we're starting to see a little bit more bullishness, but again, hard to tell. These are areas where, again, price kind of paused, more of a range, I want to say, right here. So we're kind of in the bottom of the range. It looks like we have some more bullish price action here. So we'll see. A lot of indecision. It's hard to tell. And again, on this chart, not enough for me. Let's go to step number 2. So we know that we've got this kind of bigger, we're trading kind of in this bigger range action. What's been going on over the last few weeks? You can see it's been, it was sideways. We kind of got bullish. We retested. Now we're trying to retest the highs. Let's put in right here. You got a weekly. I'll put this here, monthly. And then right up here, you can see you've got a yearly, monthly, and previous day's high. So again, whenever you have those important levels close to a previous day's high, absolutely turn them into a zone. And then you can see you had the weekly with the previous day's low. So we know those are important. So coming in right here, are we above the previous day's high, below, or inside? Well, most of the day we were inside, and then towards the afternoon we did break out. But definitely, if you were trading, and again, if the middle is something you have proven, that was a beautiful setup right there. Really nice setup. And again, what are the rules in the middle? Number one, you have to have proven that you've had consistency. You need space of 2 to 1 to the top or bottom, and I need to have that obvious either break and retest or rejection, which you have. All right, let's go to the scalp chart. Step number 3. Now, oil opens at 9 a.m., but you had news right here. So we come in between 7. So it was 8:30 right there. That was news right there. So right there, there's when oil opens. But so this setup right here was a multiple rejection. Very nice setup right there. That was really the best setup. This, once we get too close to the previous day's high, then I need to either see a break or rejection. But if you were trading oil, that was a very nice setup. If that's something that you prove, again, as long as you've proven it in your back testing, I don't have a problem with it. Let's go to gold. Again, I want to try to do as many different symbols that we trade or asset classes. So step number 1, there you go. Go to that weekly. What's going on in gold? Again, I hope that you're saying to me, yep, I see the bigger range that's been going on for several years. Let's put that, equal highs, equal lows right there. All right, so we know that we're in a bigger range. We can box that range up so we know what it is. But again, you can just see, even like I showed you on the Russell, look at all the setups you had. Remember, it's either bullish, bearish range. The setups are the same if it's 1 minute, 60-minute, weekly. Only difference is how long you hold the trade. But look at this. You've had fake out breakouts, top third, bottom third rejections. Right now, we're in the middle of the range. I don't want to trade the middle of a range, typically. So now we've got our 30-minute. Now we've got this bigger range going on. What's been going on inside of it? We've been a little bit more bearish. And then again, remember what I talk about, whenever you have key levels near the previous day's high or low, just box those areas. And then we can see we've got our weekly, monthly levels above potential targets if we break out. Now, gold, looking at the last few days, we had this consolidation to start the week, breakout. So this would have been an excellent rejection trade again if you trade the middle. The other trade that I do see is we went from an inside day, break and retest. Now we have the makings of that bullish momentum with potential targets up there if we continue to do this. All right, let's go to the scalping and day trading. Now remember, gold and currencies open at 8:20. And then we had news at 8:30. So just move it to 8:30 right there. Again, I don't trade into news, but you had a really nice 1 try, 2 try right there. Very nice setup. Long if you're a gold trader, and then 1 try, 2 try, 3 right there. So either the second or third, definitely a nice continuation trade if you were somebody who traded the afternoon. But if you're somebody who traded the morning session, for me, this was a very nice setup right here. Very nice. All right. And then you got your 2 to 1 back up to the top. So gold definitely paid on Friday, just following. All right, let's go look at the euro. Same thing. I don't care what asset class it is. Okay, it doesn't matter to me. First step is go to the weekly, monthly, what's been going on. You can see we've had this long-term bearishness. We had this bullish momentum, but then basically sitting in a range, a tight range, on the euro. We're in a range. So again, what do we do with ranges? Equal highs, equal lows. Now, this is a pretty tight range. So to be honest, I really would want to get above or below this before I do anything. Now, maybe in the smaller time frame, the 30-minute step number 2, we know that we see the range. So what has price been doing? It's been bearish. But we can use this range. So it looks like we had a fake out breakout in that bigger range. And we may have something here moving forward next week. So let's put this right here. These were the important levels. Weekly, monthlies. Remember, if we break out, we want to know where those weekly, monthly yearlies are. But this was an inside day. But again, look at the price action. We had a fake out breakout. Again, this is why I said, if you understand the bigger picture for a shorter term, we know there's a bigger range. We had the fake out breakout, and of course it rejected at the monthly and weekly. No surprise. And then you got the break and retest right here on Thursday. And that trade came from a bigger setup from the weekly. And then you had the follow through right there. Again, if the middle is something that, again, this trade was really nice rejection, really nice. All right. So euro closed inside day yesterday. But again, just going through the progression. Now let's go to the scalp chart and day trading chart. Remember, euro, same thing, 830, but it opens at 820, but we move it to 830 since there was news. And look at that. Beautiful, beautiful. You had multiple rejection right there. Beautiful, beautiful, beautiful. You had 1, 2 setup right there. Big parabolic move down to the previous day's range low. And then you had that rejection right off of there. And then where are the targets? Back to the middle, and then you had the round trip. So euro gave you a beautiful rejection trade, and this is what I'm talking about. But the overnight traders, when they came in, this was just all chop. And again, we don't trade the news. So overnight traders basically had chop. Then the news came, big parabolic move, and then here in the US, because we couldn't break below the previous day's range low, gave us a beautiful bottom third and middle trade. All right, let's go look at the Japanese yen. That's another big traded one. Again, I don't care what it is. You can keep throwing symbols at me. I'm going to do a few more because I really want you to get this and see it doesn't matter. The steps are the same. So first thing we do in weekly, what's the weekly tell us? We're bearish. We're making lower highs, lower lows, momentum into pullback and pauses. Those pullback and pauses are where we look for the setups. Here's your most recent high where price paused here. These are where the pause. I'll put in the bottom here right there. Let's go now to the 30-minute. What's been going on over the last few weeks? We know it's bearish. We're moving lower left to upper right. Then zoom in. What's going on here? And we can see that price has been follow the price action. Momentum right here. Momentum into pullback and pause. Unfortunately, this candle's too big for me. And then we're starting to bottom here, and we had a beautiful, you can see it right here. You had the monthly, weekly right here, rejection, consolidation. Then you had a break, and then you had that beautiful rejection. That's a beautiful trade right there. You had basically a fake out breakout rejection at the previous day's range. Beautiful setup right there. Let's look at the day and scalp chart. Again, 830, it opens 820, but 830 because there was news. And look at that setup. I mean, really, it doesn't get any better than that. You have a big, strong move. Now, again, the overnight traders came in. just a bunch of chop, nothing. Then the big move down, parabolic move, and then the buyers said, and you had a fake out breakout. One try and then move right there. Beautiful setup. Again, if you're in the middle, where the targets, middle, and then top. Again, understanding the A setups in a bullish, bearish, or range market. Okay, that was the Japanese yen. Let's go look at Bitcoin, which is live actually right now because it never closes. So let's see. So let's go look at the weekly, the monthly weekly. Take all this off. So what is Bitcoin doing? I hope you basically said it's moving bullish. It's lower left to upper right. And then where were the areas where price looking left paused and left the station quickly? Here and here, most recently. And then what about right here? These are what I call the decision points. These are just the most important areas historically and most recently where price pauses and moves quickly. I don't trade into those, and we're up against a key decision point looking left. All right, so we know we're bullish, but we're up against a decision point. Step number 2, again, we squeeze that chart up. What's been going on? We're moving lower left to upper right, then zoom in, and you can see the last, we basically be in chop. Okay, we're basically been in chop. We've got a monthly, yearly, very close today to the previous day's high. All right. And let's see here. We've got a weekly right there. So now we've got chop looking at the 30-minute right here. Are we above the previous day's range and yearly? No, we're not. Are we below? We're starting to break below right now. So definitely we've had chop for the last few days. Right here, sideways range. Let's go see the 3-minute. See what's going on today. All right, so using the previous day's range. If you were an overnight trader, you're someone who trades the session. Again, if you back tested, the reason I like this one, again, if you've back tested the middle, got multiple levels there, rejection, break and retest. You got a wide enough range. So again, if you have back tested the middle trades and you've had consistency, then I'm okay with it. Right now, what I'd be looking for, this is how I set it up. So right now we're below. So if I'm going to get a bearish continuation trade, I need to see this. Something like this, momentum into pullback or pause, lower high, lower low. And I'm looking for those pullback and pauses, or if we get something like this, strong rejection back in, we reject twice, a minimum of twice, and we get back into the range, and I'm going to be looking at the middle and higher. That's it. That's what I'd be doing right now if I was trading Bitcoin. All right, let's go look at a few of the key stocks. Now, Mara has been an incredibly hot stock. It's a Bitcoin miner, same thing, no different. Go to the weekly. I'm going to look at the areas again. Where has price basically paused and moved quickly away, either with wicks and again. So these are the areas for me of interest right here most recently. And you can see we had the break and retest. We came back to this area and failed. So right now we're bullish, but we're rejecting right now. So we've kind of got this area from about 14 to about 32. So again, I'll break this into ranges, bottom, middle, top. I don't want to trade the range. I'll look at the top third, bottom third until we can break out. Again, doesn't matter. Just read what price is doing. Step number 2, let's go to that 30-minute. All right. So we know I've got some key levels at the weekly here, the monthly. All right. What is price doing based on? All right. Since it's a stock, I'm just going to move it right down to the smaller chart because we don't have the overnight data. All right. So this was on Friday right here. Previous day's high, low, midpoint. And we can see that price from the day before and then literally had one try, two try. So again, if the middle is part of your game plan and you have proven it in the back testing with consistency, the range is wide enough where you have 2-1 to the top money, you get that strong break and retest, which you have. I'm okay with it. Now, you also had this trade right here, double bottom, rejection off the bottom third, either here or here. And I'm okay with that as well. So these would have been the trades right here if you were trading Mara yesterday, but this definitely very powerful short right there, just going with the price action. Let's go to NVIDIA. Again, I'm just going to do a few of the key symbols so you guys can see. We're doing indices, we're doing commodities, we're doing currencies, and then I'm doing specific stocks. There we go. Step number one, it's the same. What's been going on? Where has price literally, it's moving lower, left, upper, right. It's bullish. Where has price paused? You have this range right here. Where has price paused and taken off? Well, right here. I'll put one where the new high is. So this is kind of our decision points. 30-minute, what's going on? Let's go to a smaller one here. So then we look over the last week and we can see it's been choppy. This was a nice rejection day right there. And we can see, just looking at the action, it's been sideways. But looking at, again, we had the open right here. Where is price? Well, here's the open above the previous day's range high. Here's your previous day's midpoint low. So it was an inside day on NVIDIA. So let's go to a smaller time frame. So NVIDIA basically top third, middle, bottom. NVIDIA gave you, we're basically, remember, we're in a range. So range days, what are we looking for? Top third, bottom third. I'm not going to trade the middle when I've got, ultimately, look at that, beautiful, beautiful setups. These were your setups on NVIDIA. Now, again, we're trading typically till 12 o'clock. So 1, 2, 3, if you were an afternoon trader, you had that. But again, we had multiple rejections at key levels at the top third, and we had beautiful movement. Okay, this is what I'm looking for. Big move up, rejection. Either get rejection or continuation. Big move down, either get the continuation or rejection. Big move up, you're either going to get the continuation or rejection. And because we know we're in a range, and we also have the zone here, we've got that level right there. So we know when we're in a range, we're looking at top third, bottom third, fake out breakouts. So you had a fake out breakout, bottom third, fake out breakout. Again, this is the previous day's high and the zone. We keep getting these fake out breakouts at the top third, fake out breakout at the bottom. You had beautiful trades if you were trading NVIDIA. Let's go look at Tesla. Again, steps are the same. I don't care what it is. I love this process. Number one, it's 1, 2, 3. Step number one, we're looking at Tesla on the bigger picture. What's been going on? We were bearish. We tried to be bullish. And now it's kind of, we've got this kind of, indecision, kind of range-ish price action. There we go. So right now, it looks like we have kind of a fake out breakout. We're trying to get back in. Can't tell enough yet, but let's see. Going down to step number 2. The reason I'm using a smaller, because remember, stocks don't have an overnight. And then coming in, again, remember what I talked about. Anytime you have the previous day's high or low, we're around key levels, make a zone. Those are important levels. And then I see there's a weekly here and a yearly. So I know those are important if we break out above or below. And again, what has Tesla been doing over the last week? Well, we've had some bullish days, bearish. Now we've been bullish the last few days. Strong move up, and basically what I would call no edge price action. Let's go to a smaller time frame. Yeah, this is just chop. So that's just chop right there. So if you were trading Tesla on Friday, there was nothing to do. Now, the day before, look at that. We broke above the previous day's high and open, beautiful momentum. And then look at the beautiful setups. Momentum into pause and pullback, momentum into pause and pullback, momentum into pause and pullback. Beautiful, really nice. Really, really nice days. Unfortunately, this only happens 10 or 20% of the time. Most of the other time we're going back and forth in ranges. All right, so that was Tesla. Let's go to Apple. I'll do one or two more and then we'll go back and enjoy the rest of our weekend. But I hope you guys are really getting excellent value out of this. I love doing this. I learned so much myself by doing this. So here's Apple. All right, so we've been bullish, but you can see we kind of been in this kind of range, I want to say, almost now. We're right up against there. We're rejecting. We got this area. So really, we don't have, enough information. We're kind of in this range. So for me, again, I really want to see Apple get away from this, but all right, let's go. Let's see if we had a trade here. So you see, we've got the the bigger range. We know that those are important. Now, what's Apple been doing over the last week? It's been, bearish. It's been moving lower left to upper right. Now, remember, whenever you have a previous day's range high or low with other levels close by, so this is our previous range low, midpoint, and highs right there. So let's go down to the 3-minute. So if you were trading Apple yesterday, you knew that the week has been bearish. And look at what we had here. We had a beautiful parabolic move up, beautiful rejection right there. That was your setup. You had a fake out breakout. That was the only setup right there. Let's go to 1 minute. There was your setup right there. And then the rest of the day, it basically just chopped sideways. But that was a beautiful, we had a parabolic move up. And again, what I'm looking for is if either get the continuation, which we did, or you get, again, when we're dealing with, this is why I love the tools that we use, because these levels are predictive, not lagging. And the previous day's range quickly tells us, are we bullish, bearish, or range? And again, the buyers looked like they were going to do it, and then they got rejected. So there was your trade right there. Okay, let's do one more. What else? Let me see. What other one do I like? Let's do the semiconductors. This is the ETF. So it doesn't matter. Let's go to the week. Step number one. What is it telling us? It's telling us, looking left, that this area right here, well, the last areas it paused and left quickly. All right, right here. These are two areas right here where we're rejecting. So these are important to me. All right, so then I go down to a smaller time frame. What's been going on during the week? And we can see that the semiconductors have been going lower left to upper right, but we're looking here. Here's our yearly. I'm going to just put in these key levels. Remember, the weekly, monthlies, these are areas that if we break above or below the previous day's range, I'm going to be looking at. So let's go down to our here. So if you were trading XOL, over the week, you can see we're kind of back and forth, bearish, trying to get bullish, but then we failed. And look at that. You had this big parabolic move rejection. So for me, one setup, two setup, and you had another beautiful right here. Fake out breakout. Beautiful. I love it. Look at this. Parabolic move down. Again, if this was going to go short, it would have done this. And we would have looked for the continuation trade outside below the range. But no, buyers came in, rejected. Beautiful, beautiful trade. These were the two best trades right here. again, because you had the parabolic move. Now here you had a parabolic move up, and then you had multiple rejections. So right here was also good. But again, if you got two setups like that, you're done for the day. One setup like that, you're done for the day. So XOXL looks good. And here, Meta, because I know a lot of people like to trade Meta or Google. I'm just trying to look to see which one had Amazon. All right, so here, again, let's go to the weekly, and then this will be the last one, and then we'll go back and enjoy our weekend. But again, I love doing this. And if there's any symbols that you want us to do, hit us up at hello@trade90x.com. We'll make sure we review it. Anything you don't understand about the process. Now, again, step number one is always the same. I look at the weekly, monthly. What has it been doing? We're moving lower left to upper right. Look left if there's historical information. Where has price basically paused most recently? Right here. And then this is historical. And then most recently, I'm going to adjust that right there. These are the decision points from the monthly and weekly. Now, I don't trade into those. So now I go down, since it's a stock, I'll start with my 10-minute. Again, what has Amazon been doing all week? Well, you had that big, gap up, and then we basically been sideways. So, all right. Basically been sideways. Let's go to our smaller chart. And yesterday when we came in, remember, that's the beauty of these levels are all in before. Again, we know where our weekly and monthlies are above. We know where the previous day's high, midpoint, open, previous day's close. They're all here before it opens. That's why I love this process. We know whether it's bullish, bearish, or range. And look at this. This gave us not just one, not just two, but three right there rejections at the previous day's range low. Doesn't get any better than that. That was a beautiful long setup if you're trading Amazon. All right. So let's go back real quick. Let's wrap it up now. So again, we looked at the news. We know what news is important, especially Wednesday and Thursday. We know what earnings are coming out. We know the fear and greed is still bullish. Stock momentum has been a little, it's above 50, but let's see, definitely been weakening over the last month. We're still bullish. There's still more green than red. The commitment of a trader report long-term is still biased to the bulls. And then again, long-term versus short-term on the key symbols, not only that make up the market context, but what we trade are definitely moving lower left to upper right in the larger picture, short-term, lower left to upper right, but we're right up against those highs. So we need to see a little bit more. And then we went to the chart and I showed you the top-down approach. Again, matching this up with the commitment to trade report, that monthly and weekly are bullish, but we're up against the highs. The weekly is bullish, we're up against the highs. The daily is up against those highs. So we need to see something. And then coming in, looking at our 30 or 60 minute, we can see this is going to be our new high low. And we can see from our price action, we could not get above and get that continuation. So we're going to see whether or not can we get back above, or are we going to break down and look for a target there on the open. So anything that you did not understand about the game plan or trade plan, the data we look at to build an edge, and then how we use our top-down approach, and then using the Trade90X one chart view, step number one, again, going to the weekly and monthly to determine what is that main trend, where are the decision points where price has left the station quickly, and then going to the 30-minute to look at what's going on. So this could be our, again, faster swing trading chart or our anchor chart for our day and scalp. And then we then determine whether or not using our tools, are we bullish, bearish, or range? And then step number three, going down to our day or scalp chart to see those setups. And again, are we bullish, bearish, in a range? And again, once you go through the Trade90X Earn the Right to Trade Live process, again, you're not going to trade live until you, again, that's why it says earn the right to trade live until you, number one, you've got a consistent strategy. Two, you've mastered your numbers. Number two, you've mastered what the bullish, bearish, and range looks like using our tools. You've mastered our bullish and bearish momentum setups, and then our range setups, fading the top third, bottom third, or fake out breakouts. With that said, let's go enjoy the rest of our long weekend, and then I'll be back with you on Monday or Tuesday to start the week. Enjoy.